Hello everyone and welcome to today's cryptocurrencies update for Wednesday, April the 20th. Let's have a look at near and far and a little bit of everything. Just a little bit of a hodgepodge. I don't want to always go into the same old or regurgitate the same old. So let's have a look at, for example, Bitcoin. I'm mostly going to focus on Bitcoin and Ethereum today. And here is the short-term wave count for Bitcoin, where I'm going to zoom in quite a lot more. So far, we've reached the ideal C of 2 target zone. Okay, assuming we had I'll show you here, a irregular flat A, B, C here bounce. Didn't really reach yet the full potential target zone for this wave 2. I'd like to see it go at a minimum higher than we currently have. But please remember, in bear markets, upside disappoints and downside surprises. So it will now have to take a break below this level here. Where is the cursor? This level, of course, the B wave there, to tell us that wave 3 is underway to here, right? This is then wave 3. This should then be wave 4. And then our final wave 5 into the 25,000s. I don't have it on the chart yet. That would be the bearish option. Now we always know that the market, including cryptos, always keeps its options open. There are always at least 2 doors cryptos or anything can go through, either door A or door B, and we have to try to assess which of those 2 it's going to take. Now, please remember that the cryptocurrencies are in a large, potentially cycle degree, fourth wave. So cycle waves take a long time to fill in, and they are inherently complex, nasty, overlapping, hard to forecast, the whole 9 yards. Look at the price section we've had so far in 2022. Total disastrous mess. When we were here in 2022, nobody could forecast this would go this way. An impulse is much easier to forecast. You simply have 1, 2, 3, 4, 5, very easy. A correction all in itself is hard to forecast already. You have 12 plus patterns to choose from. Okay, so we have a zigzag, a double zigzag, and a triple zigzag. We have 6 different types of flat corrections. Okay, that's already 9. Then we have 3 triangles to choose from: symmetrical, ascending, descending, and then the triangle can even subdivide. So that's what we really are looking at. So many different types of corrections. When the correction starts, nobody knows what it's going to turn into. That is really the problem. So we really have to take this day by day, hour by hour, week by week, month by month. It is continuously going to be crappy, because this is a time of uncertainty. That is the hallmark of a fourth wave. It sounds like, this guy's just washing his hands in innocence. All right, well, let me know in 2017 how you would predict how price would progress. Nobody knew. We kind of start off with the usual ABC down. That's the minimum for a correction. That's the anticipation. We know where fourth waves should bottom, ideally between 23.6 and 38.2% retrace. Can do a whole lot more, can also do less, but that's normal. So that's our standard Fibonacci retrace level we're looking at. Then we say we expect at the minimum 3 down, and the easiest 3 down is a simple zigzag: A, B back up, and then C down. That's simple. But after 3 down, you can expect 3 back up as a flat, a 3 down, 3 up, 5 down, or a triangle. You just don't know. So you have to anticipate after 3 down, expect at the minimum 3 waves back up, because the correction can become larger than just a zigzag. Then you had the zigzag was wave A, then you have another zigzag higher is wave B, and then another potentially zigzag lower for either triangle or a impulse C wave lower. It's really unfortunate the way it is. Impulses are easy, 5 waves up, and they can subdivide. They simply look higher. Corrections can be all over the map. For all I care, price goes backwards, all right, in time and the price, whatever it wants to do. So here are 2 options. We're going to zoom out. We had our wave 4 here in June of last year. Okay, it was a very nice expanded irregular flat. Wave A, wave B, and then a 5-wave decline for wave 4. Loud and clear, 5 waves higher into the all-time high in November. Okay, 1, 2, 3, 4, 5. I simply look at weekly closing prices. Price closes lower, then we have a corrective label, a 4 or a 2. And then you have this wave 2 here, loud and clear, A, B, C. I don't have the label here, down, up, down on a weekly basis. That's 2. And then 3, because we had a down week, that's then 4. And that's, of course, 5 of 5. Then we started the correction. A couple of weeks ago, we reached the ideal wave C in red of B target zone. So technically, we've done enough. We bumped into resistance, or not we, Bitcoin. I didn't do anything. Bitcoin bumped into resistance and has since been selling off. So far, it's trying to resurrect itself, but it can do this 1, 2, 3, 4, 5 pattern lower to about 25,000, 27 to 25,000. I've extended the 200-week moving average. Depending on how long it takes, we might actually get a nice tag of the 200-week moving average. It's wishful thinking, but it would not surprise me. So this is option 1. Is this the preferred option? For now, yes, because the shorter term does look impulsive to the downside. Remember, 2017 was primary 1, 2018 was primary 2, or cycle 1, cycle 2, and this is labeled cycle 3, and now it's cycle 4. Potato, potato, you can call it micro 1, micro 2. It's just a label, doesn't matter. We are now in a large primary 4 wave that should retrace all of this major 5 wave that started in June of last year. Quite nicely, if we get a retrace to about 27.5, 25,000, that's really what we're doing. And then primary 5 can start bringing price to the 100, 105,000. Remember, see the forest through the trees. If you're going to dabble in the hourlies, expect little returns. Okay, small time frames, small returns, big time frames, big returns. And that doesn't mean you should have any stops in place. Every single time frame must have its appropriate stops in place. I can't stress that hard enough. Okay, always have stops in place, because maybe my work is wrong and Bitcoin is going to go to 0. It's the end of the world. Well, if it's the end of the world, nobody needs money anyway, so who cares? But you know what I mean. So then the other option is, as I said, we have now had 3 waves lower. That could be wave A of a possible triangle. We simply connect the dots, the lows here, and this starts to look like a triangle. A triangle can be an A, a B, and a C, and that's it. And it can be also a D and an E, and then we blast off. If that's the case, then the B wave of a triangle is, of course, 3 waves, and 9 out of 10 times extremely complex. Then we just stopped for A of B. We're now in B of B, and then C. If you look here at the extension of wave C, 0.382 times A, we would reach this target here of around 55, 60,000. It is possible. So this option is in the chart. I have no signs that this is actually possible. The only way to know it is if we break higher above the A wave high. Okay, that's the cue. Not until then. I might, of course, already start seeing some more upside potential if we start making weekly higher closing prices somewhere around there, that level here. But that's so close to the breakout, it's almost potato, potato here as well. So that is a very potential possible pattern as well. And then you can go, well, yeah, it can go up or down. Yes, it can go up or down. This is unfortunately the 2 scenarios we're looking at. Can it become a flat? Also possible. Can it turn into something else? Most likely not. So we have the simplest of options is a simple ABC lower. That is the simplest of options. This then should be primary 4. Not even necessary. It can be A of primary 4, B of, etc. Remember, corrections are really tricky. This is easy. This is impulsive 1, 2, 3, 4, 1, 2, 1, 2, etc. Now we are in an uncertain market environment. It's just the way it is. Longer term, I see no reason to be bearish on the cryptocurrency, especially not Bitcoin or thing. I'm not. I'm long term not bearish at all on these cryptocurrencies. Not at all. If you have a long horizon, you'll, in my humble opinion, be fine. We'll have to break below the 2017 high, which is at 17, 18,000 or somewhere around there, to suggest something else is going on. and we're not even close. We're still at 41,000. Remember what we've done so far this year. 2 things, check, and you know what. Okay, very easy for us then to establish that we have not made much progress and are thus in a corrective pattern. And we simply have to bide our time and see how things progress. So we do it anticipate, we do the monitor, and we adjust. If we break lower, we're gonna be lower. Then we follow this path, right? We don't want to go below this week's low. Then we're gonna follow this path. And if we break out, we're gonna follow this path. So as long as things are sideways, there's just not much cheese to be eaten from this sandwich, honestly. Short term, maybe a few little trades, but always be careful and cautious with that. Now, some of you have pointed out, like, hey, is there maybe some relationship with the technology sector because of blockchain companies and all that stuff? So here I've plotted the NASDAQ 100 versus Bitcoin. There are nice periods where we have similar patterns, and we have also a lot of periods where there is quite some dissimilarities, okay? Pretty much here is where there's not much similarity going on between, is in 2018, between Bitcoin and the NASDAQ 100. Same here in 2019, kind of same here, 2016, etc. So the correlation is not one-to-one. However, there's many patterns that do really fit quite nicely. And it looks like we've had a nice correlation, I would say, since the early 2020s. Okay, so since March 2020, it looks like we have a pretty decent correlation. And this still suggests that if we follow the NASDAQ, we kind of have an idea where Bitcoin is going to go. And where Bitcoin goes, most other cryptocurrencies go as well, except, of course, for a few altcoins. This is simply a correlation. It's not causation, of course, but it's interesting to track to kind of give us an idea what's going to happen next. That brings me to Ethereum. Ethereum is in the same boat as Bitcoin. It's the second largest gorilla in the room, right? Bitcoin is the 800-pound gorilla. This is the 600-pound gorilla. Have we bottomed or topped for wave B? Very possible. We've already reached the ideal wave 2 target zone. If we're going to break higher above this trend line, then I'm going to apply the same wave count here for this alternative for Ethereum as well. Ethereum and Bitcoin do trend quite generally in the same direction longer term. Most of the time, Ethereum tops a little later than Bitcoin, but in general, the path is quite the same. So far, we've already reached this wave 2 target zone. If we're now going to break below, let me take this full stochastic away. I don't like it anymore. There. If we're going to break lower, again, that is, of course, this week's low. If we're going to break below this low, then we have, of course, this path in place. 4, 3, 4, and 5. And then, in my humble opinion, all of wave 4 is complete, with, of course, the alternative that this is only wave A of 4. Well, what good does that do? Well, even after a wave A, you will get a very large wave B. And after a 4, you will get an even larger primary 5. So both will be looking to the upside. Then we'll start to figure out if we can get an impulse higher, yes or no. If we see an impulse higher, then the chances start to increase that we have, of course, completed primary 4, which remains my preferred view. But we always have to remain open to the possibility that this primary 4 is going to be massive. You don't know, fourth waves can last for a decade. If you look at the stock market, somewhere from about 1960 to 1974 was a 15-year-long fourth wave. So it is very possible that we're dealing with a much larger primary 4. So again, we anticipate, we monitor, we adjust. Then we anticipate we've bottomed. Alternatively, we haven't. Then we still need a bounce or primary 5. Both give plenty of long upside potential. So shorter term, if we can break above this trend line for Ethereum, about 3,300, then I'm going to look higher and think that we have this triangular pattern in play. Wouldn't surprise me. Okay. If we're going to break lower, below this week's low, that's why I already said on Monday, as long as this week's low holds, we can move higher, and then we're going to break down. Shorter term, let's have a look at the hourly chart for Ethereum. I haven't touched the hourly chart in like decades. It looks like we have an impulse lower. I'm simply counting down hours and up hours here as waves. And impulse waves traveling 5, 9, 13. Why 9 and 13? If we have subdivisions of the third, the fifth, or the first wave. So we have subdivisions going on, it looks like it. So it does look like we have an impulse lower. It's a little tentative. I don't like the hourly chart too much because it's more open to interpretation. The gray horizontal lines is where I'm looking for potential overlap that shouldn't be there, and it's not there. So far, so good. Then we do have a impulse higher, again, 9 waves higher. So I think we've topped for wave A. We should now be in wave B and another C wave to go. Again, look at the length of this decline here, which is about 2 weeks. So I expect this bounce to last a little bit longer than 2 days. It's quite logical to assume. We have reached, as I said, the ideal wave 2 target zone, but I think we're going to get a little bit more complex for this wave C of wave 2. That still remains the preferred point of view, and then we should move lower. If we break out above 3,300, again, then we have this option in play. That's really the 2 options I'm looking for. It's quite simple. Yes, it can go lower, it can go higher, but we know the if-then scenario. If we break below this week's low from about current levels, then I'm going to look for this impulse pattern. If we're going to break above this trend line, which is at about 3,400, it depends a little bit when we get there, then I'm going to look for this pattern to be taking place. That's a good, nice upside potential and a good upside to trade, but we're not there yet, and I expect that path also to be nastily overlapping and whatnot. It's not going to be easy, as we are still in a potential larger 4th wave. Okay, so please keep that in mind. So that's the power of the Elliott wave. We have beautiful if-then scenarios. We can't always figure it out exactly on the shorter term what's going on. We need to give it time, but we have our if-then scenarios. If we break below this low, then this door opens. If we break above this high, then that door opens. Those are the 2 doors, and right now the market can make up its mind which one it wants to take. Hourly chart does suggest we're going to take this door, but we'll remain open-minded, so to say, for further differences in wave count. That said, let's have a look at GMT. This is the wave count for GMT. This is the new kid on the block. I presented to you a couple of weeks ago, I believe, when we were about here in early April. I said we're then in a wave 4, which could have dropped a little bit lower. And after 4 comes 5 to complete this larger wave 3. Potentially, we have completed this larger wave 3, but based on the daily candles, I would like to see one last wave 5 or 5 or 3. Not necessarily, but it would be very nice. Then we get 4, and then we get 5. So far, this cryptocurrency is filling in really nicely. Okay, really nicely. So far, so good. I simply, honestly, if all I did is move the 3 and the 4 and the 5 a little bit more to the right, and that's about it. So this is tracking really nice, and I continue to view this as an impulsive move higher for GMT. Looks pretty good. It's following quite nicely. Should be in a smaller 4th wave based on the daily candles. Doesn't have to. Alternative, we've topped for this larger wave 3. But again, in bull markets, pullbacks are buying opportunities. In bull markets, you can be a little bit sloppy, right? You can buy here or here, and you still make money. You just have to kind of sit through it. In bear markets, you have to be nauseatingly accurate in your longs. If you buy it at the wrong time, you'll get destroyed. Why? Because selling pressure. In bull markets, you just buy the dip. Whenever you think it's a dip, you buy it, and eventually you'll make money. Super easy. Everybody's a heroes, and then we all think we're going to be world champion trader till the bear market hits. That Bitcoin and Ethereum are in, and things all of a sudden become very difficult. But this looks good. I like the wave count. I'll keep tracking it. Thank you to those who pointed it out. I know some have made nice coin on this. I'm super excited because some have really struggled with trading cryptocurrencies, and this one has given them the confidence and the profits they're finally looking for, and that's all you need. One is more than enough to make a good money. Then I'm going to present the second new kid on the block. Somebody pointed this one out as well. And I can't do all of them. I mean, I sometimes get a legion of different altcoins. I'll just pick 1 or 2 that are reasonably easy for me to interpret. This is the weekly chart of NEAR, and it looks quite nicely for impulse. There's just one weekly candle I'm not so happy about, but otherwise I'm quite fine with it. I'm not going to get too distraught by one candle that doesn't match the pattern. Weekly down candles are corrective, 3, 4, and should now be in 5. Remember, fourth waves here are a little bit complex. We break above the high from 2 weeks ago. Wave 5 is underway. As long as we hold here about $12, that's key. Let me put that in the chart here. There, we need to hold this level here. $12 is critical. Okay, that should be absolute critical. But so far, it looks like we're having a nice corrective price action going on here for this wave 4. Can last a little longer, and then a wave 5 to complete potentially a larger degree impulse, and then we're going to look for a much bigger decline. So near and far, right? This is near, and this is kind of far, is what we assessed. And we'll simply have to track each and every one going forward. We're still not out of the woods. I still have no clear indication. The large primary 4 correction is complete for Bitcoin and Ethereum. If anything, 2018 should be a timeline similarity of about a year. And if we topped in November of last year, again, we need to go through a few more machinations for this primary 4 to complete a similar length in time, which is multi-month into, again, the summer, potentially the fall of this year, to have this completed. And by then, everybody has lost their faith in cryptocurrencies. Everybody thinks my work is useless because of the fact that we have so many gyrations in price and too focused on the short term and too little focused on the bigger picture. Again, I have zero indication that we have put in a massive top and that the massive bear market is there. We'll get there if we do. Never been my initial expectation. I've had this primary 4 for many, many, many months. So far, so good. We simply have to track it. So we have our if-then scenarios in place. We know that we can always become more complex for these massive corrections. We have the new kids on the block doing pretty well. I like GMT. It's progressing very nicely. And now we simply have to wait and see how these smaller scribbles are going to fill themselves in. But I still think we have a larger 4 and 5 left. And of course, some other coins are doing pretty well too. So that's all I have for today. Let's see what we get on Friday. If we can maybe fill in this C of B a little bit better, that is my preferred view. But again, if we start breaking below the lows made this week, then we have to consider the bounce already complete, albeit being it really short relative to the initial decline. But price trumps everything. Though sometimes symmetry is nice, of course. But again, we'll have to track everything diligently and see what we're going to get over the next few days. But so far, so good. I like it. Everything is moving along quite nicely. Shorter term as well, we're starting to reach the lower ends of the target zones as well. So now we simply have to see if we can hold the lows of this week. If we do, then the corrective bounce can continue for a few more days and progress higher into bigger resistance zones. So thank you so much for listening. Thank you so much for being a valued premium member. Please assess the charts carefully. Please have a look. If it's something unclear, let me know and I'll gladly answer. I know this is very complex and complicated because we are in extremely complex and complicated market environments right now. It's not easy. It's not easy for me. So then it's sometimes hard to explain exactly what's going on. But essence is corrective price action will dominate for the foreseeable future. Take care, trade safe. See you all on Friday. Bye.